but I do remember that the uptick difference was 13,166. So from May to June, new NAR members increased 13,166. So, people are saying, oh, the industry is going to be slaughtered and agents are going to get out of the business. But we just saw 13,166 new realtors join last month, right? In the month of June over May. So tell that story, because what makes you any different? If there's less transactions going on, which is still historically high number of transactions, if there's less transactions going on and there's more realtors, that means there's more people to eat that same pie.
Yeah.
So what are you doing to be different? What are you doing to stand out?
Yeah, we try not to do only market data, because I think that if they're in the mode to buy or sell, they care. But what about those 7 years in between? On average, people move. I think it's even 5 years now. But still, how do I stay relevant in their life for the next 5 years before they buy or sell, so that they reach out to me when it's time? And so for us, it's, on our consumer stuff, it's very localized. Here, yes, there maybe it's a little bit of real estate.
Welcome, everybody, to another episode. Today is July 8th, 2022, and we're going to be talking to David Childers from Keeping Current Matters, where he keeps, current matters and lets us know what's going on with the market, with inventory, with rates, and what the overall economic output looks like. And today we're going to be talking about the inventory that's coming to the market, which is leveling out the market, making it more fair. We don't see a crash, I don't think, not just yet. We're going to talk about interest rates, and we're going to talk about the number one question, David, which is,
should I buy a home right now?
All right. So welcome, man. And welcome back after the 4th.
Thank you. It's been I was telling you before, we took a couple of days off, and it was a great 4th celebration for us. Hope it was for you and for everybody else. But yeah, no doubt we saw a little bit of dip in interest rates. I'm going to talk about this. Johnny, I don't know if you saw this, and I tell other people, go check it out. I did a reel on this yesterday for KCM, and a lot of traction on that. I think about 50,000 views here in the first 24 hours. I don't say that for any other reason. This is a great topic to be talking about right now. I guarantee you, if you do record a video on it, I think it will be something that will be, talked about, hit the algorithm the right way right now. So some good news coming out on interest rates. And, we've been sort of, sparse on good news over the last few weeks in the housing market, it feels like. And, so that was a good thing. So we'll talk about that. And then that question that keeps popping up, there's so much online right now, so many people that I would say, are missing perspective in the housing market right now. I never want to have blind optimism about where we're at. Very different market, but I am very optimistic about home ownership and what we see in the fundamentals of the market. So I want to remind everybody of that. And I've got a few new graphics to share with you on that as you talk to people about, should I buy a home right now?
Absolutely. And I got a question for you before we get rolling.
Yeah.
That about the reel that you did.
Yeah.
Explain it. Did it have a green screen? Was it just you talking?
I just talked. So you can go to KCM's Instagram right now. You can go see it. If you're not following KCM on Instagram, I would do that. So what I started to notice yesterday were two things happening. One, we got the average 30-year fix from Freddie Mac yesterday. It comes out about 10 a.m. on a Thursday morning every week. And we saw the drop. We saw a half of a percentage point drop. The average 30-year fixed right now, I'll get into this in a minute, it's 5.3%. Johnny, we've been hovering up around 6%, let's call it, in an interest rate. So we saw a drop. That's a good thing. The other thing that's very clear, there are two things happening with inventory. As interest rates over the last couple of weeks have risen, they've moderated the market, meaning less people buying, kind of eliminating that frenzy in the market. So inventory works like a bathtub. The more water you put in, if the drain's wide open, it goes right out the bottom. But as that drain starts to get stopped up, it collects. So we're seeing inventory collect in the market just from the lack of frenzy in the market. Okay, so that's one thing happening. The second thing happening with inventory is, I'm going to show this to you. It's coming to market at a faster, slightly faster pace than last year. So more listings coming to market. And I think that may be a byproduct of folks going, did I miss the market? Should we go ahead and do it before it's too late? So you have two things happening here. You have interest rates starting to come down. This is all about recession. I'll talk about this. And you have inventory rising. So that's great news for buyers, right? If buyers have more choices, what has the last 2 years brought us? Very few choices for buyers. A lot of buyers frustrated in their home search. And oh, by the way, we're starting to see interest rates get a little reprieve. I'm not sitting here jumping from the rooftops going, this is unbelievable. Again, 5.3% is not bad historically for financing of a home, but we're seeing a little reprieve there, and expect that to continue if this talk of recession continues. And we do end up looking and saying, hey, in the rearview mirror, we are in a recession. I wouldn't be surprised by that if that came out. And that was just the video. I didn't use a graphic. I didn't use anything. I just came on and just spoke from my heart. Here's two things that I see, and I think this is the message we need to deliver right now. So that was the video.
Yeah, absolutely. That was a great video, and I did see that, and I wanted to ask, but 50,000 views is pretty good, man. Pretty good.
Yeah.
And if you can do it, listen, anybody can do it.
Totally. Absolutely.
Right?
And that's the point there. And certainly the people that follow KCM drive that. And but I would say this is something that people want to know right now. They want to know what's happening in housing. Many people are keen to what's going on in our business. So let me hop in and break that down, because I want to give you the visuals. I want to give you the proof. And then Johnny, let's talk about after that, what's the best way to record a video. You can use a green screen. You can do a lot of different things, but definitely get this message out. So let me give you the points there that I just talked about. So I mentioned Thursday morning, Freddie Mac comes out with their average 30-year fix. This was their statement yesterday. The average 30-year fix, 5.3%. And it says this: over the last 2 weeks, the 30-year fixed rate mortgage dropped by 0.5% as concerns about a potential recession continue to rise. So interest rates starting to drop as more and more talk of recession is happening out across the economy. And so we're seeing a kind of a material shift in interest rates right now. Now, I don't have a crystal ball. I can't tell you what's coming in the future, but if recession continues to be talked about, expect to watch that continue to sort of moderate and not climb. It says, while the drop provides minor relief for buyers, the housing market will continue to normalize if home price growth materially slows to a combination of low housing affordability and expected economic slowdown. Okay, so we're seeing a little bit of shift. All this is about inflation. Johnny, we've talked about the Fed working hard to tame inflation and sort of looking at that. So as I started to look at this is the look, we've used, since the beginning of this year of the average 30-year fix. You see 5.3% on the far right. That's yesterday when they published that. And there's been sort of this climb, peaked a couple of years ago, a couple of weeks ago, 5.81%. And listen, a lot of people are saying, it was over 6% during the week. This is a weekly average done by Freddie Mac. And then last couple of weeks, we've seen interest rates come off of that high. Now, again, don't have a crystal ball to say this is where interest rates are going, but all of this is in response to the economy slowing down and more talk of recession. So what's the talk been? The moderation in real estate has been all due to the rise in interest rates over the last couple of weeks that we've seen, really the last 4 weeks, as we jumped up to almost 5.8% and stayed there for a couple of weeks, and then, kind of have come down. So that's the first point. We're seeing a drop in the 30-year fix. I referenced the Freddie Mac weekly monitor and the drop of 0.5 percentage point. Second thing we're seeing active listings increase in the market. This is a look going all the way back to the beginning of last year, 2021, and the active listing count in this country in the thousands. So you see the peak last year, sometime around August, September, about 620,000 active listings. And where are we at in June? We're knocking on the door of 620,000 active listings. This is purely from a couple of things. What I just mentioned, as the market is moderated and the frenzy subsides, we just see more inventory collect in market, right? You know that you're in it every day and seeing it. Things aren't selling, as quickly. Maybe some things are overpriced right now and sitting on the market, but we're seeing that inventory collect. Now, the second point that I just mentioned, Johnny, we're seeing new listings come to market slightly ahead of where we were last year. So this is the green bars here, 2021, blue bars, 2022, new listings coming to market each month. And what do you see? You see this shift after March. In April, we start to outpace the prior year, meaning people putting their homes on the market at a faster pace, although slightly, but we are seeing more come to market. So you can say two things here. The frenzy in the market, is being moderated by rising interest rates, and we're seeing more inventory accumulate. I referenced that in the video, and we're seeing listings come to market faster. So that's a good thing. Interest rates are dropping by half a percentage point. I'm going to take these down for just a second, Johnny. Interest rates drop by half a percentage point. We're seeing more inventory come to market. Now, I can tell you what I know and what I don't know. I don't know what the next 2 weeks, what the Fed's going to decide, what CPI is going to be. I can't predict the future. But if we start to knock up against that 5% barrier and maybe dip into 4% on the 30-year fix, just the mental feeling of that for people, I think is going to be materially different. And we're seeing inventory rise right now.
Yeah.
So my message right now would be, hey, if you're a buyer that's been looking, or you're a buyer that I talked to, I want to get that in your hands. I want to get you looking. I want you to be ready when that opportunity presents itself, if it should. And so that was kind of the essence of the message. And certainly, Johnny, from a video perspective, you are the expert, but I think there are good things to talk about right now, not being disingenuous or saying, hey, this is absolutely going to happen. But if it were to be something that would happen, I'd want to have my buyers prepared right now.
Absolutely. I think you got to be having these conversations. And while you're talking about that, I just took a look at the consumer confidence index, and it's just interesting to watch. That's on its way down as rates are on their way up and everything else like that. So something has to spur, I would imagine, to get that confidence to go back up. But yeah, you need to be having these conversations. And I just want to let everybody know this. I know that you see a lot of people out there. You'll see David out there all the time doing his reels and stuff like that. That's part of his job. You see Tristan, you see Jeff Fitzer, these guys are influencers. They're putting out massive amounts of content. I'm not. I'm a strategic individual. And I just want you to understand that you don't need to be an influencer to be influential, right? You just need to be consistent. Right. I'd even say if you put out one excellent video per week with some targeted and retargeted ads, that's more powerful than putting out a video every day. Right. But to put out a video every day, for me, I use the same background on a lot of my videos and stuff like that because it builds up that similarity, right? Or familiarity, I guess is the word I should use. But start to have these conversations so you can sound like that knowledgeable person, because you are an expert. You are the person they're looking to guide you through the largest purchase of their life in most situations. Most of the time when these people are buying, it's for some sort of life event, and they're looking at you as the expert. They're going to hope, I think, that you have the knowledge of what's happening in the market, because I know I've been asked a million times, how's the market? Right. So I want to be able to tell them. I don't want to give them just my perspective. I want to be able to give them some educated information and then my perspective, right? Yeah. Because the market's slow for you might not be slow for me.
I want to ask a question here, Johnny. You feel free to answer it, but anybody in the chat, I've got the chat open here and can watch that. Is there a video that you say, hey, this is a video I want to create on, the drop in interest rates, rise in inventory? Is there another topic that you want to create on that I can bring you information on? I would want to do that. Johnny, is there another video that you're thinking about right now that you think, hey, this is something that needs to be set out in the market? So if there is a video you're thinking of, or if there's a topic you're thinking of, put it in the chat. But Johnny, I think that's what it is. You mentioned, whether it be Tristan putting out video, but does a phenomenal job. It does it a lot more than I do or we do at KCM. But, what are those topics right now? Maybe you're seeing agents or you see people talking about, because I think right now if we don't do this, everybody that's in our business, and there are a lot of people in our business that are calling for an apocalypse in housing and things like that, they begin to drown out some of the data and the truth and the insights in the market. And so I think we're fighting kind of a two-front battle. One,
Sure.
getting information out and being the expert ourselves, but also providing the truth of here's what's happening right now. You know?
Yeah. For me, I like averages and historical averages. And when you can take a look at, because, I did a webinar yesterday, just a pop-up Q&A, and Mike Cueva said in South California, I don't know if they're seeing it now. So if anybody's there, you can comment, or if they're expecting a 15 to 20% correction, right? Now, don't get me wrong, a 15 to 20% correction brings you down to a normal market because you're already 30% inflated. Right. So what is the averages, the historical averages look like, right? Compared to, several years ago, compared to the crash, because a lot of people want to, there's a lot of doom and gloom around the crash. Now, about the recession, there's closings in every market. You just have to determine who the agent at the table is going to be. And here's the thing. In 2007, 8, when the market crashed, the big crash, the biggest crash ever, something happened a few years prior, right? So we had the whole scandal with the loans and MLOs and all those things, MBOs, MBSs. But in 2000, I lived this because I was a network engineer during the .com. The .com world, the biggest driver of our economy, crashed. It exploded in 2000, 2001. But the real estate market continued to be strong. I got into the real estate market. I crushed it. No Zillow, no Facebook, because they didn't exist. They didn't come out until like 2003, and I think 2006, something along those lines. 2003 for sure for Facebook. But the market didn't crash until 5 years later. So the real estate market traditionally responds, in my experience, much slower than the economic factors, because overnight the market can crash. The chance of a real estate market crashing is low. But don't get me wrong, we're still being impacted in our industry because the refi business has dried up, right? Has pretty much dried up because those historically low interest rates have all been consumed. So you're seeing large lenders laying off 20, 30, 40%, right? So will it have an impact?
Doors too.
What's that?
And some closing their doors too.
Some. And then there's like, I forget what they are. They're over in Michigan, United something. They're growing. They're eating up market shares because they can dictate the rates because they lend their own money, right? So they can lower the rates by 0.5%. So there's a lot going on out there, but you want to be aware of this stuff. You want to be able to talk about this stuff, but don't get into a panic situation. And when your clients are in some sort of panic situation, be the calm, cool, collected cucumber because you are the professional, right?
Yeah, I agree. So I see a couple comments here. Christina, video on why housing is not crashing and why. We're going to talk about that in just a minute here. Should I buy a home? And then Daniel on Facebook, thanks for putting that in there, Jake. A video about shifting cities across country. I'm seeing a lot of shifts in Colorado. Lots of people moving here. Daniel, I think that is a great point. There's a website that you can look at. 2 websites I'll tell you. We've done some. You can go to the KCM blog and search moving and see the studies that moving companies do of net out and net in states. So you can go to KCM and see things we published on that this year because moving companies publish that information, and it is interesting. The term they use in that right now in our business, you may have heard me say this, Johnny, is birds of a feather. And we're certainly seeing migration patterns in this country with people that identify politically, people that are trying to get out of high tax areas, people that want to, move to a place where they believe there are like-minded people that value what they value. I don't care which side of the political spectrum you are, that is happening, right? People are migrating to places, and we could probably spend many days talking about that and all the things going on there. But no doubt, Daniel, that's a great video, and you can go to KCM and find that information. Christina, the housing market not crashing, and a video on that. We have done those on KCM. You can go grab those, or if you want to email me, I can send you some resources on that, David, at Keeping Current Matters. But I want to say this about a crash in anything. What people always want to bring up is the old saying is the black swan event. Where that comes from, is a lake. Think about it, with all these beautiful swans on it. Then one's born and there's a black swan born. And nobody could have seen that coming. Came out of nowhere. There is no way to predict something coming out of nowhere. What you have to be rooted in is fundamentals in the market. And I can't show you right now a case for nationally there to be a housing crisis. I'm willing to listen to anyone that want to talk about it, but they're usually scenarios that are not likely scenarios. I watched a podcast last night that talked about the rise in inventory in this country. And if that were to continue to rise and shoot through the roof, then values would go down. I agree. But the likelihood of inventory soaring up to 9 or 10 months right now is just not likely. We don't see that as a likely scenario. Yeah. And so I think studying some of those things and saying, okay, what does history tell us? What do the facts tell us about this? And maybe, Johnny, I'll hop into this story of should I buy a home right now? Because I think embedded in that question is, gosh, it feels like homes are going to lose value. It feels like the market's going to correct. It feels like things are going to happen. And what I would say is listen to what experts are saying. Did you see the Dave Ramsey video that's kind of floated around? There's been several of them about the housing market. He does a good job. He's certainly an animated character and a great communicator and all that. Sure. But I have a quote in here from him. But let me go back to what experts are saying about the U.S. housing market and values right now. And more importantly, what I want to get to is the why behind this. So if you followed us here on these shows that Johnny and I have done, this is a look at the home price forecast, most up to date, 8.5% appreciation this year in residential real estate. Most of that's packed into the front end of the year. I'm not saying if the home was overpriced or there's some inflated values, they might not come off that, but the net appreciation this year forecasts around 8%. That's what experts are saying. Now you can look at your particular market and say, hey, this is what I see happening in my market. Here's the reason I see that. I absolutely believe you should do that. And if it's different than that, you should bring it to those that you serve and be articulate and passionate about why that is the case. But on that Dave Ramsey video, he said this, and I clipped out the quote and made a slide. Our team did actually. He said this: the root issue of what drives house prices is almost always supply and demand. Okay, so how many you have on the market? How many people want it? And he says now interest rates affect that. When interest rates go up, guess what? Fewer buyers. That's exactly what we're seeing right now. The demand goes down, those prices are going to have to soften or not be as cray, he says that, as they have been. But that's not what we're seeing right now. Okay, we're seeing a little bit of less activity, no doubt. But let's talk about supply and demand. Where do you see supply and demand going in your market? I'll tell you this, Johnny. I think there are a lot of people on the sidelines right now kind of hoping the market crashes because they want to swoop in and get a deal. They're not like, can I buy one? They're like, can I buy two or three? When that happens, that right there in itself should tell you not likely the market crashes, because anything that comes on the market that might be perceived as a good deal is going to be snapped up faster than you can think. Mm-hmm. But if we want to have this conversation with people, we want to record a video on it. Here are your two main points that I think support the argument of no crash and sustained price appreciation. The first one is this, and you've seen this graphic maybe before from KCM. This is a look at single family housing units completed going all the way back to the 70s. And for the last 14 years, we've been below the 50-year average in the number of homes brought to market. Now this year, we will certainly surpass the 50-year average, and builders are trying to build them as fast as they can. But you can look at studies that show the US housing market is undersupplied in the millions of homes for the number of people that want to buy them. Okay, certainly more dramatically needed on the lower end of most markets. Okay, so we know that to be a fact. That's been the leading cause of price appreciation. There just aren't enough units on the market because of the lack of builds. You can go into how builders were affected in 2008, but 14 straight years where we've been below the 50-year average in new single family housing units coming to market. So that's the supply side. Let's talk about the demand side. The thing that makes this so interesting is the demand piece. And this is a look right here at generations. Millennials, the second largest generation behind the baby boomers, they are right now moving through their peak home buying years. I kind of drew this box right here between, I think it's 22 to 31 is NAR outlined in their home buyer report. Those are the peak home buying years that we know statistically people buy. And what do we have? We have more people moving through that age range than we've had in quite some time. That demand there is driving everything that we're seeing. So the why behind this is a rear view mirror looking supply issue and a current day demand, sort of anomaly where we see all of this demand coming. And I think that's really the important point, Johnny, is that we understand that, where we sit right now, certainly in a shifting market, is very different than what we saw in the last couple of years, and would lead a lot of people to say, this sounds like it doesn't end well, but it's something that, let me pull this down real quick, that when you start to look at, just from the data, just from what's going on in the market, just isn't a case to support it. The black swan event could always happen. Anything can always happen.
Yeah.
But you have to bring in some degree of likelihood, would that happen to the scenario.
I think what we're seeing is natural ebb and flow. Things go up, things go down. And the way it was explained to me many, many years ago, especially with the stock market and the mutual fund, is it's going to go up and down, but it's going to get here. You're here, it's going to get here over time. And I think right now we're in a down cycle a little bit, but that graph I took a picture of right there, it shows you perfectly that we are not getting too much inventory. The demand is there. There's more people now in this country than ever before. Right? Every day people are born by the thousands. So there's more people in this country now. There's housing that's needed. I just don't feel the immediate rush like it was. That pressure might be gone, but the need still exists every single day. Right. There's industries, I did this in my live yesterday, David. There's certain industries that don't stop no matter what the economy looks like. The military is one. Healthcare more or less is another. Doctors and surgeons are going to relocate every single day. Get in with these people, right? Nurses and all these other people. Radiologists make a bunch of money. Are you getting involved with these organizations or finding a way to be connected to them somehow, right? So I just don't think we're going to see this crash at everybody's talk. I just don't understand why it would happen. I don't see it.
Yeah, there's two things that are true about where we're at in the market right now, and this takes into account that we're in a slower market. We're seeing the impact of rising rates. Two things will happen. It will affect some people negatively and will cost them market share. The other thing that is absolutely true and will happen, people will build businesses through this time. There are people that will buckle down and go, you know what, I'm going to make a difference. I'm going to get out there. I'm going to talk about what's going on in the market. And I think we have that opportunity.
And those people are going to stand out, but understand this too. Saul Klein posted this yesterday. I don't remember the exact numbers, but I do remember that the uptick difference was 13,166. So from May to June, new NAR members increased 13,166. So, people are saying, oh, the industry is going to be slaughtered and agents are going to get out of the business. But we just saw 13,166 new realtors join last month, right? In the month of June over May. So tell that story, because what makes you any different? If there's less transactions going on, which is still historically high number of transactions, if there's less transactions going on and there's more realtors, that means there's more people to eat that same pie. Yeah. So what are you doing to be different? What are you doing to stand out? Right. I love your data. I love these conversations because they give agents everything. And I'm glad you touched on that millennial piece, because NAR, the best thing in my opinion that NAR does, that's a tangible benefit that you can look at over and over, is the generational trends report. Yeah. They put it out every year. Go get the just Google.
Shows you who's buying, what they're looking for. It's phenomenal.
Everything. Yeah. And so those millennials are going to be in there. So I said this again yesterday. What are you doing to play to the millennials? What are you doing to play to the boomy babies? Baby, what are they? Baby boomers.
Baby boomers, yeah.
Because they
Let me
have
give you a
different emotional
shocking-
hotspots.
A shocking statistic out of that report.
Yeah.
Millennials what they do is they look at the last calendar year and they say what made up the market. And you should expect that for this year, maybe shift here or there, or small. 81% of first-time home buyers were millennials. Out of that report, you can go look it up.
How many?
81% first-time
Wow.
home buyers, millennials.
Wow.
43% of all buyers were millennials. So if you're not looking at that population, you're not looking at that report from NAR, gosh, I would hop in there. We do a lot of different blogs and things like that on that report once we get it, but it is a wealth of information, well worth the investment of time to read it and study it.
Can I just add to this? And everything we're talking about here is going to lead to this. Millennials, where are they? Right here. They're on this.
Great
They're
point.
either on Instagram, right? I think that's the preferred one, right? So Reels is so powerful because it syncs up with Facebook. Most millennials, the millennials I talk to aren't on Facebook. They're on Instagram or something else. Now, a report that I read yesterday, which opened up a couple of doors for me, which is pretty cool, all the way to Meta, right? All the way up to their journalism project. Cool. It said that by 2026, 89% of all mobile traffic delivered will be video.
Yeah, I've seen those.
Right?
Shocking.
89% of all traffic delivered to your mobile devices will be video. So if it's not going to be you, it's going to be somebody like me, right? In your market that says, I'm going to take control of this. I'm going to spend 30 minutes every day to make a video. How long did it take you to make that reel?
A minute.
Right.
But I'm in that every day. Maybe it takes 15 minutes to record.
Sure. 15 minutes. I'm even going to say 20 minutes because you should have captions, right? Yeah. That's the name of the app. It's $15 a month or something. Get it. And you can put captions in there and look really cool and professional, right? And then you can say, hey, if you want more information like this, just go to the New Hampshire Market Update.com. And when they land there, they get pixelated. I could go on and on about digital marketing, but I won't because this isn't a show about that. So there's a bunch of ways for you to do it, but you got to deliver here. And David just showed you on a map here and explained to you what the NAR report shows, that millennials accounted for 81% of first-time home buyers and 43 or 48?
43. 43%
of all home purchases. That means they sold something, right? That means they had bought something, sold something, and bought something. Right. Yeah. Over the past several years. So play to understand who your audience, this is marketing, right? Yeah. Understand who your audience is and deliver to them where they are, right? Deliver to them. What else you got? Anything else or is that it?
That's all I got right now.
All right. That's a lot of good stuff. I mean, all this data and all these slides that you're putting up, you can go to KCM and get them, or you can go email you, David, at keepingcurrentmatters.com. And if you want to get the real good, juicy stuff and be able to put it on your blogs on a consistent basis and stuff like that, where do you go? Try KCM.com.
Try KCM.com. You can go check it out. Try it free for 2 weeks.
Yeah, listen, it's not going to work if you don't. Right? It's not going to work if you don't. So get KCM, try it for 14 days. After that, it's less than $1 a day, right? What is it? $29 a month, $30 a month. Mm-hmm. All y'all are spending more than that on martinis at lunch. I know it because I know you. You know, your glass of wine that you got to have is more than that. So empower yourself to be a knowledgeable professional in your area and bring this information. And I can guarantee you do this for a month. You do it for a month, you're going to see your engagement increase. You're going to be seeing your sphere of influence say, wow. You're going to be able to create content that you can send to your sphere of influence. You're going to be able to create blogs with these videos and this content. You're going to be able to empower yourself with content galore so you can be omnipresent and be as awesome as David Childers. David.
Hello.
I appreciate you, man. This is great conversation.
You want to put it out there better than that.
Right. I want to be as good as you. I want a Jeep.
Johnny, listen, I think the name of the game, you hit it right there. It's consistency.
It's
Because
consistency.
once you're consistent and you're doing it, you might just be thinking of something one day and go, you know what, I'm gonna record a video on that. It'll become second nature to you, you know. So
Yep. Cool, man. Empower yourself, guys. Use Keeping Current Matters. Go to trykcm.com. On behalf of LabCoatAgents, thank you.
see ya.
Peace.